look at today's price action on eurusd and spx500 if we have enough time. So y'all see this is starting from the left side of the screen. We're going to start with New York midnight open. And you see I have that projected out. We open up here at midnight and immediately trade down. Okay. London session kicks off right here. We get an expansion higher, creating relative equal highs. We drop we drop back down into this fair value gap, and then sloppy price action. You can tell that it's having trouble going higher, but it eventually gets up above that old high. Okay, we create another high here. And look at the change in the state of delivery from this expansion higher opposed to these three. Okay. New York session kicks off and we have this huge run up right into this daily order block. To understand what I'm saying, I want to jump up to a daily time frame real quick. All right. Here we have a run up creating relative equal highs here and here. The following day we open, immediately trade up and expand lower, engulfing this last up candle. When we traded up, we took out this high and these highs. That validates this last up candle as an order block. So what we were anticipating is for this candle to open and trade up and become a seller up here. Let's drop that down to a 5 minute. And we're going to hit the replay button. All right, this is 7 o'clock right here. Let's watch it. Right there. You see when that happens? That's the market telling on itself, okay? Now, at this point, once we jam up into that daily order block, all you have to do is wait on that shift in market structure. So we have this low right here. We need for that low to get taken out and then a retest. Let's slow it down a tad bit. All right, we get that break. So we traded down below it here and then closed below this low. All right, so we have our purge of buy side liquidity. And then we have the shift in market structure, the change in the state in delivery. We jam down in a hurry. So we have our fair value gap here. It's 7:45 going into 8 o'clock, New York open. 8:30 is the time that we typically want to see the markets perform well. And this is 8:15. We trade right back up into the fair value gap. And we have consequent encroachment of that fair value gap right here. Tags it. So I sold as price was coming up into this fair value gap, around 50% of this imbalance. And I placed my stop right here, or you could place it up here above this high. So that is roughly 6 pips, 4 to 6 pips. And basically what we were doing here, we got news at 10 o'clock, all right? And we know this from monitoring Forex factory. We get that expansion down, creating another fair value gap here. So I also placed the sell limit at the discount low, which is at this candle high. This is the low of the fair value gap, and this is the high. Discount low, premium high. Sell limit here, stop loss right above it. $10 o'clock news hits, and we are going into London close. We have our one standard deviation, which is the projected low for the day, and we used Asian session to confirm one standard deviation below Asian session is 1.01300, and that's what this line here is. And you see it came down, dug into that 300 level, and then turned around. So 10 o'clock news produced a huge sell side imbalance. It came back up and rebalanced about 80 to 90% of that imbalance, and then trade it lower. And this is bringing us close to, all right, so I'm gonna drag you over here, and here we are at midnight. Midnight opening price is here. So if you take this midnight opening price and expand it out, and if your bias is bullish, you could participate in a long at this opening price. It comes down, tags that, digs a little bit deeper into this price leg here, probably about 50 to 60% retracement. And then we trade higher, we shift the market structure as we take out this high, which leaves us this buy side imbalance, fair value gap. And this fair value gap is very significant because it is the candle that was responsible for the shift in market structure. That validates it even more. Price trades down, consequent encroachment of that. And it also tags the opening price of this last up close candle, which is our breaker. Have a high, a low, higher high, price digs down into here, coupled with the fair value gap. And then we trade up, taking out the previous high. I did not participate in this market. I was not looking at the charts at this time this morning, but at 7 o'clock, we got on. And as price came up here, we have a buy side imbalance. And this is where I chose to enter the trade right there. Now, what am I targeting? We have a fair value gap over here. So I'm targeting that. And I'm also targeting this high. We immediately go into profit. We jam up, another buy side imbalance. Trade down, order block. But look at where the bodies of the candle is respecting. It's respecting about 50% of this fair value gap, okay? But the wick dropped down into this order block. But a lot of the times it will not do that. So keep that in mind. We get an expansion higher, reacting from the low of the fair value gap. We drop back down into this little 5-minute order block. No, drop back down into this fair value gap, 50%, before completely closing in that fair value gap, that way over there to the left of the chart. At this point, I'm phasing out of my position. So we have an entry here and an entry here. 10 o'clock news hits and jams up, and I close the trade. Do I regret doing that? Yeah, I do. All right, so 10 o'clock news hits, we trade up into that fair value gap, come back down into this buy side imbalance, and make a run for the old high. I was looking at, I think this was on the 15-minute time frame, fair value gap. I was looking for price to trade down into that, and as you can see, it's bouncing around in there. But as you can see, it's 8 p.m. It's not the right time. A buddy of mine pointed out to me how NASDAQ, spx500, and US 30, they all made a significant high and then broke lower. And you can see the change in the state of delivery of the candles and created a nice sell side imbalance right here. So I would be interested to see if price can get back up into this level and react. And then I would drop down to the 1-minute time frame. So basically what we're doing right here is creating trendline liquidity. You have all these retail traders that are selling every time it comes up and pops that trend line. So yeah, see if price can get back up in here and then react. This could possibly refine that fair value gap. Equilibrium is right inside of that fair value gap, so that's going to be interesting. All right, guys, I hope you guys enjoyed this. Until next time, man, peace out.